I have come up with an analysis where I want to highlight what are the raw mistakes a retail investor is doing and why is he not able to make the money in the stock market. Please beware that making money in stock market is very difficult. In general also, if you see, making money is not the easiest job. The whole world is fighting for money. So it should be understood that the same principle applies in the stock market also. There are challenges, there are people, various groups working in the stock market. They all are fighting for the same gains. So we have to be very careful about how do we approach stock market. And please stay with me till the end of this video, and I can bet if you don't find the video useful, I would request you humbly that please you might skip this channel, because that really gives me a rethink that maybe I'm not able to convey the feelings or connect with the audience. This topic is very important for all our investors in general, especially if you are watching this channel. This is going to be, I'm hoping, a retail investor. Retail investor is small investor, salaried people, people who earn very limited money. So they put a lot of hard-earned money in the stock market, but they lose a lot of that money to these big guys. What are the mistakes they are doing? We will look at this carefully. So if you find this video interesting, likable, please hit the subscribe button and do share this video widely, because ultimately we have to recognize the power of retail investors. The power of retail investors can change the dynamics of any stock anywhere. One recent example happened in the US. I will talk about that little later. And we have to build a strong community of retail investors where they all come up together. Somebody comes with insights, analytical capabilities. They are also, every investor is trying to read the data from various forums. We need to collect this all information and share it with the like-minded or the people who are invested in the share market, in the same stocks, so that we all enjoy or we all share our hard work and gain together. This is exactly what is called outsourcing of many of these, or crowdsourcing, I would say, not outsourcing, sorry. So the crowdsourcing of various things. Somebody has something very interesting, other person has some other strength, some other person has some other strength, and if we collect or if we can bring all of them together, we really make an interesting scenario for everybody. Before we come to the topics of why we are not able to become as profitable as Rakesh Jhunjhunwala or Warren Buffett, I'm sure many of you would have few questions. For example, you all are investing money, but you don't make money. You have tried all the tips and tricks in the books suggested by so-called gurus, the social media influencers, the YouTubers, and so on. So please don't fall for them. I'm telling you, they all have their different agendas. You only need to follow the practices or the advice guide which we have got over many years from these big investors. So these big investors have laid down the right path for all of us. So please follow them. So if stock market were to be a battleground, okay, if stock market were to be a battleground, so please understand, in every battleground you have to understand and know the strength and weaknesses of each enemy. Everybody is a competitor, everybody is trying to beat the other one, so everyone has their weaponries intact. So you also need to have your weaponry refined, designed well. You should be fully equipped this to handle this battle. So let us see the challenges you have in the market. You have fund houses. The typical job of fund houses is to give returns to their shareholders, their investors. The second one is stockbrokers, an important entity. Stockbrokers want you to commit more and more transactions. Every transaction incurs some cost and they get that cost as the reward. Okay, so their motivation is, many retail investors, if they commit these transactions more and more, they get benefited. Then we have investment banks in the battleground. These investment banks have deep pockets, 24/7 working people. They have research, everything for them. Now, rating agencies, everybody who wants to come and utilize the stock market, arrange funds, they have to go through the rating agency cycle, and they have a stake in this. Big investors like Rakesh Jhunjhunwala or probably Warren Buffett, right? These are the guys you have to fight with. And then the one is small investors, retail investors. So I am assuming everybody who is watching here on this channel will be falling into the retail investor category. So I have my special would say connection, sympathy, or relevance with them, because I am myself a small time retail investor in my own capacity. Okay, so now this is a warlike situation. You have these competitors, challengers, who are trying to win over for their respective client base, and you are one of them. You need one of the challenger. You also want to get benefited on your investment. So like every battle, we need to have our weaponry intact. So let us see the weaponry typically these big guys in the stock market have. What do they have? They have people who spend hours and hours on these topics, particular sector, particular company, government rules, regulations, company policies, company's vision. If you are a big investor having, let's say, 1% or higher stake, you get to speak to you get to be heard in the company's vision and policies if you want, right? Similarly, if you are a investment bank, or all these big guys, what do they have? They have information. They can mine information based on, you know, based on anything you want. They have technology, tools, AI capabilities, and they have network connections, strong network connections in the company, outside the company. So they get the first hand information from the companies. They get the information from the government sources. They get every bit of information on rules and regulations, how these rules and regulations are formed. Therefore we need to be wary of these all developments taking place. Okay, now they have all these things. What, as a retail investor, you have? As a retail investor, you have some third class anchors, some rumors on the social media, maybe some YouTube so-called guides who are trying to, you know, gain your views, subscribers for their own benefit. So you have that weaponry. You don't have time, you don't have connection in the government, you don't have skills, you don't have technology. So the battleground is like this, right? They are here and you are here. There is no chance you can fight this battle anyhow. Therefore, please be careful about what strategy approach you are going to adopt. in the stock market. If you are going to have any chance in the stock market, you must plan very carefully. Now, one question which can come into mind is, if this is such a difficult job, should you really go in this? Why should you fight this battle? Okay, so please be careful. Retail investors are big force to reckon with. Okay, and if you are not sure about your power, you need to learn one recent incident which took place in United States. And why that is important, you will know that I have covered this incident very in a great detail on my different video. So I will add the link into the description. Please watch that video, you will learn about that. So the story is, retail investors made that stock run so high that all the big investors were running for their money. Okay, so how the retail investors pushed lot of big businesses or big participant in the market out of their business. That is the story of the Gamestop share in the stock market in United States. So I will attach that link into the description. So please watch it and do share it if you like it with others, because we probably need to build a strong community where these retail investors can gel up with each other and share their insights. You cannot fight the technology, connections and all these things, but you can definitely build a community and share the knowledge in among each other. So that is a key to success if it is possible. So if you connect on this channel, probably we can take that route. We can try to enable the small retail investors and help them not lose more money by sharing more insights, details. But these insights and details should be strategic, not the news based everyday news or rumors. Okay, so that has to be kept in mind. Please do that, check that video, very important video I talked about. So ideally saying, if we are fighting this battle with these 100-year-old weaponries in stock market terms, there are some breaking news anchors, social media, some YouTube gurus, investment planners, all third class people, right? They are not going to help you anyway. Okay, if you are fighting that battle, it is a 100-year-old battle technique at least. They are fighting this battle, they are ahead of their time by 20-30 years, and retail investors are behind their time at least by 100 years. Okay, so this gap is difficult to fill in. We will have to, as I said, we will have to find ways. Do not lose money in the stock market. That should be the first rule. But how do you make money and how do you not lose money? It's a different topic. We will talk more about these all things in this platform itself. Okay, every breaking news for these companies is old news, so don't rely on these breaking news concepts. If in general, so is there no way retail investors can make money? Should you quit the market? No, that's not the way to look at it. You have fair bit of chance that as a retail investors, everybody can make money from the stock market. But as I said, important is the strategy. Not rush towards these quick shortcuts, but look at the long term or longer routes which are sustainable and can help us, help all of us. And in terms of battleground, let these fights or battlegrounds or battles be handled by these big guys. You stay away, you choose your side very carefully and let them fight. Stay aside and watch it. Okay, and most of the time you don't have to do anything. You have to take care of the quality stocks, buy those quality stocks and review these time over time. because if you see the normal trajectory of stock market, since the inception, the stock market always climbs higher. In between there are blips, and those blips cause lot of loss, but the whole trajectory is going to be always upwards. So please trust that upward trajectory and play carefully. Okay, so the question we were talking about, why we are not Rakesh Jhunjhunwala or Warren Buffett. Let us look at the investment strategy and the techniques they implement. So first of all, they set their target. Okay, they don't look for huge returns. They are happy if they are able to have a 20% returns on their investment, and 20% on a huge money, for example $2 to $3 billion, $4 or $5 billion. If you let's say put $5 billion and you earn 20% out of your on your investment, that is going to be $1 billion a year. Huge return. You don't need to do too much after that. So $1 billion is a huge money. Okay, and if they have set these basic expectation from the stock, they are happy with if they meet that investment. They are not greedy. The second thing is, they have the eyesight, they have the vision to know what is good or what is bad. They look at the company, they look at the company management, they look at their vision, and they look at the overall sector, how the sector is moving. Is company really matching up to the pace of this sector? How the external rules and regulations are going to impact these companies? And if we have more, they can check the debt. Everybody can check the debt of the company, the cash flow, how company is generating the cash for regular operations. And on top of that, they can also study the sector performance, the deal size, order book of the companies, and if there are stocks despite meeting all these good criteria are underperforming their peers, probably that is one area they would want to get into. Again, the confidence has to come up in the management. Management is something, company management I'm talking about. The company management is the key to any company's success or its failure. So if these things are in place, you get into that company. Look at some of these big names if you want to check. Microsoft, Apple, you have Google, you have many other similar names. In India, you have TCS, Infosys, you have Reliance, you have Tata. So what do they have common? They have a very strong management. They are very widely respected companies, and they are always ahead of their time. So don't look for these small companies, where the share is itself priced somewhere around 10 to 20 rupees, and we are told the share prices can go, let's say, 5 times, 10 times, and we become richer. Please don't fall into the trap. This is, I would say, garbage at best. Okay, so respect your money, and that respect will earn you more money. Money earns money, and implement this idea in your everyday routine. Cheap thrills is something you should avoid. Markets give you cheap thrills. You earn some $1,000 or rupees, and you get excited, and then you commit a bigger mistake. That has to be stopped. All these big guys, when they invest, they have their set expectations. They know the company policy, government regulations, how these things are coming together, and they are not hesitating, or they are not hesitant on exiting on their investment if it requires. They invest very carefully on some of these events. I remember Rakesh Jhunjhunwala had invested in Titan many years ago. So gold had demand then, gold has demand now, and gold will be even useful later on. So these kind of investment backed by a good management like Titan are going to help you in the future as well. Okay, so these things make very good impact on the stock performance. So tell me, what do you think of your investment? Do you follow these strategies in your everyday life? Do you commit mistakes? How much have you lost because of that mistake? Would, in hindsight, if you look at your past incidents, do you think there was a reason to change those techniques? Do write me those all things, and I can say, okay, I'm not here to talk about everyday movement of stock, but I would give you some key events in the company history. Yesterday only I spoke about Tata Motors in India, and how their new management and the new push is not working well, because the new CEO they had thought is not joining them, maybe due to some personal reasons. So these significant events I will share with all of you. So stay connected. We walk this journey together. I am a small time investor, a small investor. I'm hoping you all are in the same boat. Therefore, collectively we can become a big power. Okay, so with that I will conclude and look forward to your comments. Please join us and stay connected. Take care and stay safe. Thank you.